Ladies and gentlemen, good day and welcome to the SHREECEM Limited Q4 FY25 earnings conference call hosted by ICICI Securities Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Naveen Sahadeo for opening remarks. Thank you and over to you, sir.
Thank you, Saisha. Good evening, everyone. On behalf of ICICI Securities, I welcome you all to the Q4 FY25 earnings call of SHREECEM. From the management, we have with us MD Mr. Neeraj Akhoury, Senior Adviser Mr. Ashok Bhandari, and CFO Mr. Subhash Jaju. So without any further ado, I hand over the call to the management for their opening comments. Over to you, sir.
Thank you, Naveen. Good morning or good evening, ladies and gentlemen. Most welcome to the earnings call for SHREECEM Limited. I am sure you must have had a chance to read our quarterly results. The Q4 last quarter has witnessed a rebound in demand driven by increase in government capex and overall pickup in all the economic activities. The residential sector demand picked up, propelled by uptake in rural demand because of good monsoons and increased urbanization. The commercial segment has also shown good potential driven by retail and office space expansion, which is fast emerging as another cement demand growth driver. While there are several challenges, but the strategic expansion, consolidation and sustainability efforts position the cement industry for a long-term growth. Talking about operational and financial performance, the current quarter has been a period of superior performance, if I may say so. Our total India sales volume increased to 9.84 million tons in the current quarter, up from 8.67 million tons on sequential basis, registering a growth of approximately about 13%. Our focus on premium products helped us improve our average realization per ton by about 5% to rupees 4768 from rupees 4554 on sequential basis again. Supported by drop in the fuel sourcing cost, rationalization of the power cost due to rising share of green energy, and efficiency measures undertaken across our operations, EBITDA for the quarter was rupees 1383 crores, representing a growth of 47%. EBITDA per ton increased by 29% to rupees 1406 from rupees 1088 on sequential basis. In fact, I might just like to add that our adjusted EBITDA per ton is standing at 1437, but the impact of one-off item of 30.66 crores regarding impact of voluntary separation scheme of employees and contract workers undertaken by the company during the quarter is taken into account. Company's focus over last several months has been on improving the price realization through enhancing our sale of premium products, raising the level of brand positioning versus competitors, and a superior, better geo mix. We are confident, ladies and gentlemen, that going forward, the strategy will play out in improving brand equity, lifting volumes, as well as price realization. The company continues its effort towards enhancing the share of green power to produce cement in a more sustainable and cost-effective manner. The company's share of green electricity in total electricity consumption, very proud to say, is stood at about 60.2% in quarter 4 25, which is one of the highest in the Indian cement industry, if not the global cement industry. The company is consistently ramping up its green power generation capacity, which stood at 582 megawatts at the end of quarter 4 FY25, up by 21% vis-a-vis 480 megawatts at the beginning of the FY24-25. During March 25, the company commissioned a solar power of 60.3 megawatt at Jodhpur in Rajasthan. The work on few more solar plants at different plant sites is underway. Accordingly, we are convinced that going forward, the share of green energy will increase further. The company also remains focused and committed to improve our ESG performance on all parameters. Again, very proud to say that yesterday the company received ESG rating CARE Edge ESG 1 with a rating score of 70.8 from CARE ESG Ratings Limited. The above ratings represent Shree Cement's leadership position in managing ESG risks through its best-in-class disclosure, policies, and performance. Further, the company also secured its place with the S&P Global Sustainability Yearbook 25 as an industry mover. Based on S&P Global Comprehensive Corporate Sustainability Assessment, the Sustainability Yearbook comprises companies scoring in the top 15% of the industry for sustainable business practices. On the capex front, recently the company commissioned few units. First was the cement grinding unit in Eta near Agra in Uttar Pradesh of 3 million ton through its wholly owned subsidiary. And the second was a cement grinding unit at Baroda Bazaar, Chhattisgarh, which is about 3.4 million tons. This has taken our total installed cement capacity to 62.8 million tons in India. Company's other ongoing projects of integrated cement units in Jain in Rajasthan and Kodla in Karnataka are scheduled for commissioning by end of quarter 1 26 and quarter 2 26 respectively. Further, the company has decided that out of the two cement mills of aggregate 6 million ton capacity planned earlier in Jaitaran, Rajasthan, only one will be commissioned in Jaitaran, while the other mill will be installed later. The company is continuously working to identify suitable opportunities to reach its goal of achieving more than 80 million tons capacity by 2028. Recognizing the market demand for premium products, the company has launched several premium products which have resulted into increase of share of premium product sales from 11.9 in Q4 2024 to 15.6 in Q4 of 24-25. During March quarter, the company launched Bangar Marble Cement, extra wide Portland slag cement in Bihar, West Bengal and Jharkhand markets. The product offers high performance attributes and an eco-friendly approach, incorporating GGBS, a byproduct from the steel manufacturing. An eco-friendly approach from our side, and the composition supports stronger, more durable structures while reducing the environmental footprints. The product will be offered alongside Bangar Cement's premium lineup, including Jung Rodhak, Rock Strong, Power Magna, and Roofon. We are expecting the cement demand to grow by 6.5 to 7.5% during FY26, fueled by infrastructure projects, rural recovery, real estate momentum, and softening interest rates. This is from my side, ladies and gentlemen. Now I hand over to my colleagues, Mr. Ashok Bhandari, our senior advisor, Mr. Subhash Jaju, our CFO, to take this conversation further. In addition to them, we also have our company secretary with us, Mr. Khandelwal, as well as our head of finance and accounts, Mr. K.K. Jain with us. Thank you, everybody.
Thank you, Neeraj ji. Good afternoon, everybody. Mr. Neeraj has given you a comprehensive overview of the operations of the company. I suggest you may like to go straight to the Q&A. But before that, I must point one more thing in these results. From this quarter onwards, we have slightly tweaked our ECL policy to have a more conservative accounting approach. Accordingly, hitherto we were providing the ECL only to the extent of legal suits filed. Henceforth, we shall be using ECL provisioning, or we shall be providing for ECL for all legal notices served. This means that in this quarter, another 24 crores of additional provision has been made towards ECL based on legal notices issued. I must caution you guys that these are provisions only for a more conservative accounting approach and do not mean that they are debts written off. We shall be following this policy, so accordingly, apart from Mr. Neeraj Akhoury's announcement of about 31 CR of one-time VRS, you may also like to add about 24 CR of one-time such provisioning. In addition, the numbers are there. You may like to ask your questions, please. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on your touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Amit Murarka from Axis Capital. Please go ahead.
Hi, good evening. So congratulations on a great result for Shree. So my first question is on volume actually. So we have seen generally industry kind of do high single digit volume growth of late. But our volume rate still remains in low single digits. Wanted to understand that what is the outlook now for volume for FY26, particularly as we are commissioning large capacities in Q1 also.
Murarka ji, let me make it very clear to you. Right after Q1 24-25, we had said that our strategy is not to be the biggest volume player in the industry, but be the most profitable player in the industry. Accordingly, a constant trade-off has been undertaken between price and volumes, and since price is what, or the resultant of the price, that is EBITDA net profit, is available to the shareholders, we thought it better to concentrate on profits instead of concentrating on volumes. And you know that it is a proven fact that you don't, in a capacity overhang scenario, you don't get price and volumes both. So you have to do a trade-off, come to a cut-off point and see at what volumes you can maximize your profitability, because that is the only distributable item in our hands. We don't distribute revenue, we distribute profits. And I have been telling you this for last 3 quarters, but then so be it. And as far as the volume for 25-26 is concerned, Mr. Akhoury has clearly said that we expect 6.5 to 7.5 or 8% growth. I would be slightly more aggressive. I would like to say that we may do about 39 million tons for this year. However, the strategy of trade between volume and profit will be foremost in our minds, and as the year progresses, we will keep you updated.
Understood. So, when we pursue, you're saying, a high single-digit volume growth is the target maybe this year, which broadly I understand will be in line with industry. So then is it fair to say that the capacity utilization will stay subdued for you? I mean, we have been seeing this to be in the range of 65% for the last year or so. So then the new expansions also will remain.
You have to understand the rationale of our capital expenditure or capacity creation. Please understand that the delta between the treasury return, which may be, say, 10-year G-Sec, and inflation is hardly about 2%. So we are creating an option at 2% for additional capacity, because if we get 2 quarters like January, March, all these option costs are taken care of. So at 2% option, we are creating capacity to see, and generally the cement demand should be more vibrant than what we are claiming today. And that is because of the fact that the demand has not been as robust as it should have been in April until first week of May, which was because of the war. So we are slightly cautious. Give us some time. The demand should pick up. We are positive about it. No growth is possible without cement and steel. So we expect that in 2-3 years' time, we should go back to about 75-85% capacity utilization.
Understood. That's very clear. Just a last question now on the Q4. So I see that the purchase of traded goods is a bit elevated in this quarter. Is it some kind of earlier, I remember some coal was sold overseas. Is it something similar this quarter?
It must be similar. I will check. I'll check and let Mr. Jaju or Mr. Jain respond on that. Please appreciate that I do not go into such detailed analysis of numbers. If you need or if you can wait, send a mail to us and we will reply you accordingly. But it should be in line with the trend.
Okay, sure. Fine, I'll just come back in the queue. Thank you.
Thank you so much. Ladies and gentlemen, in order to ensure that the management is able to address questions from all participants in the conference, please limit your questions to 2 per participant. The next question is from the line of Shakydeep Jain from Ambit Capital. Please go ahead.
Hi, thank you so much. Mr. Akhoury, just wanted to, first question would be on the branding strategy. You joined SHREECEM about 2.5 years ago. So the intent has always been to close the pricing gap with others. Initially, the different strategies didn't yield the desired results. But last few months, we've seen a change. So just wanted to see what different strategy you adopted now in the past few months. It doesn't seem like it's just withholding volume, because you're seeing the pricing gap in certain markets close with the peers. So what different have you done in the last few months which you didn't do earlier? And is that strategy different across regions? Because as per the channel checks, it seems the gap has closed in certain regions and certain regions still needs to close. So just the overall change in strategy and how is it working in different regions?
I don't think we had described our strategy, and I think you're hearing from us in the last 2-3 quarter call that we are giving a lot of push to our premium products, and it's an intent that we should improve our brand equity scores. We should create the right brands that makes an impact in the market. That strategy of creating a better brand equity score through several means, including new products, including impact on quality, including bringing the right amount of technical work in the field. All that is continuing. It's a journey. And as we find that our brands are becoming more strong, we are pushing for a better pricing as well. And I think, as I said, this is a journey, and it will take some more time before we really start talking about it that we are one of the best positioned players in the industry.
And how is that positioning different in different regions? Do you think it's similar?
I think pan-India market, the approach will be same in terms of brand equity and improving the brand scores. That will be absolutely same. The approach will not be different in different markets. We may have different brands in different markets, but not the approach. Approach fundamentally will remain same, and that is to use our brand equity to better our price positioning.
Okay. Second question on the capacity you're creating, especially in North. You have one near Pali and the other one coming up, the other one in Etah. So it looks like on the outside, similar market, North, with a distance of 500 kilometers. But just wanted to understand, with Etah, are you looking to go further, eastern side of UP, And with the Pali one, are you looking at maybe going to Gujarat? So what are the target markets you are, because they're both north, but are you looking to get to central and Gujarat from these markets?
So clearly, even Etah being closer to Agra, it is closer to the central UP markets, as well as some of the East UP markets. And therefore, we will try to use Etah capacity to better our market shares in the very high demand markets of central and East UP. As far as the north plants are concerned, we still have rooms in many of the northern markets, including states like Jammu and Kashmir and states like Gujarat and states like West MP and some other markets as well. So that effort will continue. So both plants will be catering to different markets. But we are excited that we will be entering central UP and East UP using Etah as a base. It's a large plant, and it will help us to augment our market shares in these markets.
If I may further add, putting the industrially treaty in abeyance, a significant scope exists in creating necessary infrastructure to control the flow of waters. That means much greater demand in North India. Please appreciate that. This is Bhandari.
So just the one unit you have, maybe you were looking to do it in Pali and expand it. So this new unit that you will think will be considering, Mr. Bhandari, what you just said, catering to demand in those particular pockets.
Yeah. My dear friend, you can set up a cement capacity only if you have limestone. If there be limestone in Jammu and Kashmir, we will certainly set it up there.
So that I understand. It comes from Navalgarh or maybe last year.
Yeah, but
I was just trying to understand this.
It will be for North players in general, and this gives us confidence in our 11th unit in RAS or Gekaran, wherever you want to call it, that we should be able to service it nicely.
Okay. Thank you, and wish you the best.
Thank you so much. The next question is from the line of Rajesh from HTSC Securities. Please go ahead.
Hi, sir. Good evening, and congrats on good set of numbers. First, some housekeeping numbers. If you could share what was the fuel cost per kcal, trade mix, and lead distance.
Yeah. Myself is KKJN. Fuel cost for KKCL for this quarter is 1.48 against 1.82 of March 24.
Right.
And
lead distance and trade share.
Lead distance is 446 for this quarter against 435 for March 24.
And trade share?
Trade share is 73%. It is same in the
year on year, right? And what was the cement realization Neeraj sir mentioned during the opening remark?
Yeah, cement realization for the quarter is 478 rupees per ton.
Sorry, missed this, sir.
4,758.
Okay, 4,758. Okay, against?
Against this 24, it's a 4,554.
4,554 in December.
Right. And in March 24, it was 4,722.
Yeah. And what is the incentive we have accrued for the full year? Or we have booked in revenue?
The figure is not presently available. We will share you.
Okay. And sir, what is your thought process going forward in terms of expansion? We have 3 million ton which is deferred and 3 million ton in Kotla. This Bangalore grinding unit, I think last call you had mentioned that the clearances are awaited. So what is the status on that and the 3 million ton at Rajasthan which you have deferred?
As I said, what we have put up, we are announcing, several locations where we are already in the advanced levels of preparedness now to launch an expansion. At the right time, we'll be very happy to share with all of you once we start the work at those sites.
Okay. So currently, whatever you have announced is for expansion till FY26. For expansions beyond FY26, you would be making announcements soon, right?
Yeah.
Okay. And total capex for FY26, which is earmarked on the ongoing project?
About 3,000?
Yes.
3,000.
It's about 3,000 crores.
3,000 crores. Great, sir. I'll come back and queue. Thank you.
Thank you so much. The next question is from the line of Malik from Jefferies. Please go ahead.
Yeah, hi. Thank you for the opportunity. Just a question on pricing. So you mentioned that average realization for cement are higher about 5% sequentially. So is it possible to bifurcate that between north and east to give some idea of pricing in these two regions for the industry?
If I may reply, you see, basically, if we shall share with you regional prices, but then you are generally aware that north was quite vibrant market and east had picked up quite a lot. Now, since last 2 months, south has also substantially picked up. So I'll ask Mr. Jaju to look at the numbers and send you a mail, or you send him a mail and he'll reply to it. If he has the numbers just now, he'll share it. Give me a minute.
Sure, sir.
Yeah. So, go ahead. Mr. Jaju has some numbers, he'll speak.
Yeah, the realization in northern market, it is up as compared to year on year, it is up by 3%. For east, it is up by 1%. And south, it is down by around 5-6%. And for quarter on quarter, the northern realization is up by 4%, 8% for east and 2% for south.
Okay, north is at 4% and east is 8% sequentially.
Yes.
And how is this fared in April? If you could share that as well.
Too early.
I think it will be better if we discuss this in the next quarterly call.
Sure, sir. Sure. Thank you. That's also my side. Thank you.
Thank you very much. The next question is from the line of Shravan Shah from Dolat Capital. Please go ahead.
Yeah, thank you. Sir, just continuing the previous question, just on a directionally front, is it fair to say from the average of the fourth quarter for us, the realization would be a 2% plus kind of a QOQ till now on a broader sense?
My friend, a broader sense does not, it may give you some kind of a directional picture. It is better you wait for one more quarter. We'll come back with firm numbers. What is the point in telling you it is 2% and then explaining it is 5% or it is 1%? Let us be realistic. We have not taken anybody up the garden path. We would like to deliver first and then explain. Instead of proclaiming first and then explaining.
Yeah. No issues, sir. No issues. Sir, if you can share a couple of housekeeping data points this quarter in terms of the sales mix, north, east and south, and if possible for entire full year, if you can share.
This I am leaving to Mr. Jain to explain to you. Okay? Just give me a minute.
This blended ratio for the quarter is 59%.
Product mix was northeast, west, south.
Yeah, the North India sale is 54.7, East is 32.7, and the South is 11. Its total is 98.4.
Okay. Got it. And in terms of blended share and the capacity utilization for even region-wise is possible?
It is 72% at company level, and 74% in north, east is 79, and the south is 51.
This is the blended share you said.
Yeah.
Okay. Got it. And in terms of the premium share, so obviously we have reached 15% plus. So how we want to take it by end of this year?
Well, my friend Bhandari here, again you are asking us to proclaim something. Please, we have said that we have set our direction towards this. Let the numbers evolve over the quarters, and we'll come and explain you every quarter what we have achieved. What is the we don't please understand. In my last 40 years with this company, I have never proclaimed and then explained. I have delivered and explained. Please leave it like that. It is far more easier for us and you to come with real data and work on real data. Proclaiming something and then you are extrapolating it into a worksheet and then explaining us or asking us for explanation probably is not a good strategy, in my opinion.
Yeah. Lastly, sir, depreciation for FY26 would be how much, because we will be adding a decent in terms of the capacities.
Listen to me. It is about 3,000 to 3,200 CR. What was my question?
Depreciation also.
Depreciation. I heard you correctly. I have given you depreciation numbers only.
Okay, sir. Thank you and all the best.
Yeah.
Thank you so much. The next question is from the line of Mr. Naveen Sahadeo from ICICI Securities. Please go ahead, sir.
Yeah, thank you for the opportunity. Sir, recently there was an update about limestone mines being granted in Jaisalmer. I think just a few days back there was an exchange notification to that effect. And in the past, I think we have had some mines being procured under auction in Gujarat as well. I believe this one, since you did not mention anything about auctions, I'm assuming it is under the old regime. So my question was, is it fair to assume that in the run-up to 80 million tons, one of those capacities is possible to come up either in Gujarat or in Jaisalmer or both? Thank you.
Indeed, the Jaisalmer limestone was awarded to us in 2008, and then it got caught in the quagmire of various legal appeals and counter appeals. Final order has come to us about a week or 10 days back, and it is certainly within our radar to, as a part of our expansion strategy. Gujarat we are working, and many other sites we are working. Naveen, you know me. We'll keep on updating you at right time. Yes, they are part of our overall expansion strategy, for sure.
Thank you. My last question. What is the net debt as at the end of March 24?
Since when you started using the term net?
Sorry, net cash.
That is
Sorry.
That is 5,400 CR roughly.
Helpful. Thank you.
Thank you very much. The next question is from the line of Moksh Shankar from Aurum Capital. Please go ahead.
I would like to know the clinker capacity, total clinker capacity and the total limestone reserve that we have. Hello, am I audible?
Yes, sir, you're audible.
That's my only question, ma'am.
Can you speak really loudly, please?
I would like to know our total clinker capacity and our total limestone reserve that we have.
We would not like to be very vocal on our limestone reserve. We would certainly point out to you that our first limestone reserve expires in 2046 sometime. We have sufficient limestone to service all our existing capacities and our new expansions coming up. Up to that time for sure, maybe more. We may not like to put a number to it. And your first part of the question was that you had two questions. One was on limestone. Yeah, Mr. Jaju will give you the clinker capacity.
The current clinker capacity is 36.7 million tons.
Okay.
And by the end of financial year 25-26, it will become 44 million tons.
Okay.
Thank you so much. The next question is from the line of Rahul Gupta from Morgan Stanley. Please go ahead.
Hi. Thank you for taking my question. I have a strategy-related question. I understand the idea is to maximize cash earnings, and towards this, we saw the management and company did very well, shifting towards higher pricing at the expense of volumes in the recent quarters. Now that you have guided for high single digits volume growth vis-a-vis 6.5% to 7.5% for the industry, how are you looking at cement pricing during the year? Are you turning a little bearish on cement prices from here on in lieu of you looking to grow faster than the industry? Thank you.
Now, Mr. Gupta, let me put it like this. You cannot, in a supply overhang scenario, enjoy the cake and have it too. You have to play an equilibrium between volumes and prices. We have told you we have never aspired to be the number one cement seller in the country. We aspire to be the most profitable cement company in the country. Top line is never in the command of any commodity manufacturer or supplier. We'll take whatever the price is. We'll try to maximize the profit, cash profit and net profit through a proper mix of volume and price prevailing at that time.
No,
so we will not think of
I understand that. I'm trying to understand how to look at industry pricing through the year. We have already seen good pricing trends over the past few months, and a lot of capacity is expected to come in the system. So in lieu of that, just trying to understand how to look at cement pricing through the year. Nothing related to Shree for that.
Mr. Gupta, please appreciate that nobody sets up a capacity with a hope that he will snatch the market share. He will have to fight to get the market share, and if he fights, then he really needs very deep pockets. You can't fight without resources. So, which is the player we are talking about, what his strategy will be, what region he will be coming into, and what kind of financial strength it has to all be taken into consideration to understand what his pricing strategy may be. But then, please understand that all existing player balance sheets are quite strong, and they can take anyone on head-on, as a matter of fact, in matching the prices. Nobody likes to give up market share in a commodity business. So it will be very difficult for us. But having said this, I have a lot of confidence into the growth prospects of the industry and general growth prospects of the country. So I expect the prices should hold and not crash.
Great. Thank you so much. This was my question.
Thank you so much. The next question is from the line of Jyoti Gupta from Nirmal Bang. Please go ahead.
Could you talk about the set of numbers? I have just one question. Correct me if I'm wrong.
Ma'am, your voice is not clear.
Is it clear now?
Yes, ma'am. Please speak something.
Yeah. Good evening, everyone. Good set of numbers. Just one question from my side. All your press releases, I understand we'll be setting up something like 50 million tons by FY26. I just need clarity on that. Correct me if I'm wrong, if it is 50 million tons if Shree Cement is coming up with. I just need to understand by when, and do we have the entire 15 million tons coming by the end of, or is it staggered to the next year as well? Just on that.
You have to understand two things. The capacity you are talking about may be the ballpark number, but then how much of additional clinker and how much of grinding is being set up, you have to consider them both separately.
Exactly, sir. So could you please provide me with the breakup?
I will hand over the mic to Mr. K.K. Jain to reply to how much of clinker is being added and how much of grinding is being added.
Yeah, our present clinker capacity is 36.7 million, and in the current year, that is 26, the capacity we are adding at 7.3 million ton clinker capacity. By end of 26, the clinker capacity would be 44 million. Same way in the cement capacity, presently we have 62.8. This includes the one unit which we have started at Ita and another grinding unit at the Raipur. And in 26, we are two new grinding units will come. One at the Raipur and one at the Kodna, and another is at Ras site or Jataran. So this would be around 6 million. So total capacity by 26 would be 58.8 million.
So could you also tell me the timeline? I completely understand the capacity breakup. Could you give me the timeline? Is it the end of 5 months that you're coming up, or is it anticipated anytime during the next in the second quarter?
Jyoti, this is Bhandari.
Yes, sir.
Clinker and grinding, additional except whatever has been commissioned, should be done by HY26.
Okay. So which means the supply would be FY27. That is all my question. Thank you so much, sir.
Yeah, all right. Thank you.
Yeah.
Thank you so much. The next question is from the line of Amit Murarka from Axis Capital. Please go ahead.
Yeah, hi. Thanks for the opportunity again. Just had a question, a data-related question. Like, could you kind of spell out what was the other operating revenue in the quarter, as well as maybe FY25?
Yeah, 150 crore of other income. Other revenue में तो आती है.
Other operating income, right? 150 crore it is.
You hear from Mr. K.K. Jain.
So other operating income is included in the revenue, and it is not, say, we will give you offline, please. You just send me.
Oh, okay, sure. Also, like, if you could spell out the inter sales also in Q4.
I don't have it later.
We will share you offline, please.
It's very, very, very minuscule, yeah?
Okay, very minuscule. Okay, sure. That's all then. Thank you.
Thank you so much. The next question is from the line of Shakydeep Jain from Ambit Capital. Please go ahead.
Hi, thank you for the follow-up. Just one question on future greenfield expansions, as we can see from Limestone, looking at Jaisalmer and Kutch. What is the rationale for this? I know you already have multiple lines in Jharsuguda, and you have Nawalgarh also. So that would mean that there is limited potential there for expansion, that you're expanding out into Jaisalmer, and I just want to understand the thought process.
No. You are putting the cart before the horse. We have not said that we will not expand in other regions of North. We have just said that Jaisalmer, we have won the mine, and it is certainly on our target now to expand. That doesn't mean that I am not going to expand at Jetaran or some other, or Navalgarh or any other place where I have limestone. It has to be a constant dynamic study of how how the market behaves, how the market evolves, and what pricing power and what premium production we can push. Please do not consider our thinking to go to Jaisalmer is because of constraints on the limestone reserves and all other non-plants we have. Please don't misconstrue it like that. We have space. Jaisalmer is a virgin area. How much market we can establish there profitably? What kind of lead distances will be there? All these are under study. But since we have got a limestone, which is really a difficult resource to get nowadays, we have taken it in our strategic plan process, and someday we will come up with a concrete plan of setting up in Jaisalmer.
Okay. Thank you so much.
Thank you so much. The next question is from the line of Kirija from Yes Securities. Please go ahead.
Good evening, sir. Thanks for taking my question. And congratulations for a good set of numbers. In fact, it's a great set of number, I can say. My first question is that what is our clinker capacity utilization for a whole year?
Mr. Jain?
Yeah. For the full year, the clinker capacity utilization is around 68%. And for this quarter, it is 76%.
Okay. So if I see from past few years, 3 years, I can say our capacity utilization has actually declined. So when other larger players are doing actually 70, 75, 80% of capacity utilization in our key market region. So again, on top of that, we are adding more capacity, and it's a good thing that we are going to capture the market share by installing 80 million to becoming 80 million tons of capacity. But if in case we are not much focused on the volume in terms of capacity utilization, higher capacity utilization, how it is going to help more in the profitability. I understand that we are more focused on cost, reducing the cost structure, and focusing on the pricing. If I'm not wrong, we do not have any kind of control on the pricing, but yes, we have control on the cost structure. But top line growth we can expect from the volume growth as well as more into pricing. So barring pricing scenario, how we are going to see this new capacity addition, how it is going to pan out, and what's your strategy that we can have a great volume so that our profitability will be more? Thank you very much.
This is Bhandari here. Number one, you are assuming that there is a presumption in your entire premise that India will not grow or cement demand will not grow. That is the underlying, because if it is going to grow, then everybody's top line will grow, mine too. The difference between everybody's growth in top line and our growth in top line is we don't want to be highest volume producers. We want to be the highest profit makers, which we have proven in spite of falling capacity utilization or whatever. So please understand that our top line will grow in consonance with growth in market. We will not be laggards. We may be slightly ahead of setting up capacity, but then please understand we don't borrow. We utilize our own cash resources to set up capacities. We are the lowest cost capacity creators. I have explained the concept of our trying to take the option at a delta of 2%.
Okay.
Profit of production, cash comes out of marketing. We must set up and produce only if we can get cash from the marketing in a profitable manner? It is a very difficult question, my dear friend, that you sit down, do an Excel sheet and extrapolate or interpolate some.
Okay. Yeah. Thank you very much. Thank you very much, sir. One last question. What is the non-trade mix this time?
I'm giving it to Mr. Jain to answer that.
Yeah, so non-trade is 27% this time.
Sorry?
It's trade sale is 73 and non-trade is 27%.
And last year, it was in FY24?
Same in last quarter also, previous quarter, in December 24 and March 24.
Okay. Thank you, sir. Thank you very much.
Thank you so much. The next question is from the line of Uttam Kumar Shrimal from Axis Securities Limited. Please go ahead.
Yes, sir. Thanks for the opportunity and congratulations on the good set of numbers. Sir, my question pertains to RMC business. So what is the current status of RMC business? How many plants we have set up or going to set up? And what kind of revenue we are expecting from this particular business?
So, as we mentioned earlier also that RMC is a new foray for us. Yeah, it's about a year or so that we have started this division for us. We are currently operating about 15 plants, but the plan is to grow RMC rapidly. At this moment, we are looking at various markets where more and more units will be set up, and this process will continue. I'm happy to say that there are several plants in our RMC division which are already EBITDA positive, which is they have achieved in a fast setup, fast ramp up of those units, especially in the markets of Mumbai or markets of Hyderabad. And this will continue. Yeah. So we expect that over a period of time, we will have at least 50 odd RMC units. But at this moment, I will not be in a position to tell you the timeline for that. Yeah, this is something that we will continue to do, and every quarter we will be able to give you an update on how many RMC plants we have.
Okay, sir. And sir, two bookkeeping questions. Sir, what was our this quarter?
Sorry to interrupt, but you may please return to the question queue for follow-up questions.
Yeah. Thanks a lot and all the best.
Thank you so much. The next question is from the line of Ashish Jain from Macquarie. Please go ahead.
Hi, sir. Good evening. Sir, my question is more on the cost structure in the three regions. Can you give some color on how the cost stacks up across the three regions? One on manufacturing basis, and secondly, if possible, on delivered cost basis, also including freight.
My dear friend, this is Bhandari here. Of course, these data will be available and we'll be happy to share. But can you please address my curiosity on your asking such region-specific cost numbers?
Yes, sir. One reason is, going ahead,
Can you
so your market mix. Yeah, I can. Sir, am I audible?
Please understand that it is the net profit at company level which is available as surplus to the shareholders. Region, you leave it to us. We will set up capacity wherever it is more profitable to us.
Sir.
You must have some faith in our business acumen. We will tell you the overall numbers. Please don't ask us questions which may have strategic importance to us.
Right. Sir, I get that. And let me, my only point was that going ahead, as we expand capacity in, let's say, South or in West, the share of those regions would increase. I'm not looking at absolute number. My idea was more to understand, the relative positioning of region if possible. I understand the strategic importance of region.
I very much appreciate, but please understand that if I am using my asset side of the balance sheet completely fungible between fixed asset and cash, any delta in profitability, irrespective of reason, will be incremental to my CROCI.
Right. Okay.
So we will be maximizing our CROCI.
Right. Okay. So secondly, just power cost this quarter, when I see it on a per ton basis, it has gone up, but seems like our power revenues have also gone up quite a bit sequentially.
Where did you get the power revenue? I don't have that number with me because it is abysmally small. It is abysmally small.
So, but then what explains the increase in power cost sequentially? Because your
so sorry to interrupt. But
it's a continuation of the same question.
So
can I go ahead?
So you may join the question queue again.
Sure, not a problem. Thank you.
The next question is from the line of Rashi from Citigroup. Please go ahead.
Thank you. Just one question. On a sequential basis, how has pure cement cost moved?
Come back again. You want cost structure sequentially between December 24 and March 25, am I correct?
Yeah, just pure cement. How that moved?
Yeah, pure cement. I will give it to Jyoti. He will be able to explain to you.
So we don't have that data readily available. Rashi will send it to you separately.
Okay.
We have the blended cost. I have the blended cost with me, which is roughly 2% down, 2% up quarter on quarter, and it is around 3% down year on year basis. But you want it specifically for cement, so that is not available right now.
Yeah, so blended is up, right, on a sequential basis?
Yes.
Yeah, so that's what I was trying to understand. On a pure cement basis, will it be down or will that also be up? That's the direction.
Just check up the and then let me know.
Okay, thank you.
Thank you so much. The last question is from the line of Tushar Chaudhary from PL Capital. Please go ahead.
Yeah, thanks a lot for the opportunity, sir, and good set of numbers. Sir, I just wanted to know the roll rate mix for Q4 and full year, and petcoke mix also.
Before I ask Mr. Jain to explain all these numbers to you, एक बात आपसे करता हूँ. I know Prabhudas Leeladhar for maybe 40 years.
Correct.
Mr. Neeraj Akhoury is when he was in Bombay, he was a neighbor to Amisha Vora. Please understand that sometimes when you say good set of numbers, it disheartens us. This kind of what prevents you from saying that these are the best set of numbers you have seen. Anyway, I'm giving it to Mr. Jain to answer to your other question.
Yeah, the rail road mix is rail percentage is around 11.3% for this quarter, and for full year it's 11.8%. In regard to the petcoke percentage, it is 95% petcoke, and the rest is coal and the alternate fuel.
And full year?
Full year is almost 3% is the coal and the alternate fuel, and the rest is the petcoke.
Okay.
It's around 97%.
Just wanted to ask the status of railway sidings, which we talked about in first quarter. We are going to cover all the units with railway siding. I think for 25 we are targeting Purulia and Patas.
Purulia has already been done.
Okay.
Patas is also
commissioned.
Both are fully operational. And the rest siding we have said by mid-27 or early 28 will be able.
Okay, thank you, doctor. And best of luck.
Thank you.
Thank you so much. I now hand the conference over to management for closing comments.
Thank you, everybody. Thanks, and I think some of you or many of you for complimenting us, though in a very polite language, on our results. It's as I said, it is a direction. It's a strategy in execution. It's a journey. We are happy that we are seeing some good lights, but not reached the destination as yet. Hopefully, when we meet you next time, we'll have more smiles and more news to share. Thank you, everybody, for joining us. Gratitude from Shree Cement Limited. Thank you.
Thank you so much. On behalf of ICICI Securities Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.